Facing the excitement of college, but also the daunting reality of tuition costs can feel overwhelming, can't it? It is easy to wonder how you will bridge the gap if your financial aid falls short. Insufficient financial aid suggests exploring private loans only after you have exhausted all other, more favorable options, including federal aid, scholarships, and grants. Private loans typically serve as a last resort to cover any remaining educational expenses. The primary reason for this approach is the significant differences between federal and private student loans. Federal loans, such as Stafford loans or Perkins loans, often come with more flexible repayment plans, fixed interest rates, and potential for income-driven repayment or even loan forgiveness programs. In contrast, private loans are offered by banks or credit unions, usually have variable interest rates that can increase over time, and offer fewer borrower protections or repayment flexibilities. They can also requiring a cosigner, placing an additional burden on family members. Before considering a private loan, thoroughly review your official financial aid award letter from your chosen institution. Understand your total cost of attendance, which includes tuition, fees, room, board, books, and personal expenses. Then, subtract any grants, scholarships, and federal student loans offered to determine your remaining unmet need. If this gap is still substantial, explore appealing your financial aid package with the college or searching for additional outside scholarships. It is important to understand your cost of attendance, often shortened to COA, which is the total estimated amount it will cost you to attend college for 1 year. This figure is determined by your institution and is crucial for calculating your eligibility for various types of aid. Federal student loan limits are often based on your dependency status and year in school, meaning there is a cap to how much federal money you can receive. Only after maximizing these, and still facing a gap, should private loans enter the conversation, usually only to cover up to your remaining cost of attendance. Ultimately, strategically managing college costs means prioritizing funding sources that offer the best terms and protections. By understanding the hierarchy of financial aid and thoroughly exploring all options before resorting to private loans, you empower yourself to minimize future debt and set a strong foundation for your financial well-being after graduation.